Vimeo is a company that I've been familiar with for a very long time. Back when I used to film skateboarding videos, it was one of the platforms I would upload my videos to. Since then, Vimeo has completely changed as a video hosting website, and they just recently went public through a spin-off from their parent company, IAC. And this is a company that went public that I'm very excited to talk about. So what I want to do today is take you through how I'm doing my research for this company and seeing if it's a stock worth adding to my watch list or potentially buying and adding to my portfolio. Now, I wanted to structure this video kind of similarly to what I did with Autodesk, just so you could see the steps that I take to go through these procedures and things that I look out for when I'm researching a company that is now recently hit the markets where we don't have as much financial data. So what I'm going to do here, remember, like, comment, subscribe, not advice, all that fun stuff. But what I'm going to do here is take you over to my computer screen. I'll show you some of the resources that I'm looking at just to really start my research when I'm looking at a company like this. I'll discuss the company itself, what they do, how they make money, and then we'll take a look at some of their financials. But before we do that, I just want to explain to you what Vimeo is in case you're not familiar. As I mentioned, Vimeo is a video hosting website where users have the ability to upload videos to their site to share with friends, family, colleagues, or post similarly to what we do on YouTube. Now, Vimeo has established themselves now as more of a video provider for businesses. They allow for businesses through a subscription service to upload videos to their business. This could be things like training videos on how to use like CRMs, different platforms they might use, training videos, or I recently took an online course for digital marketing for my real estate business, and I noticed that it was actually all Vimeo videos that the program was using through a server that Vimeo set up. Now, they have a focus saying that video is really going to be the future of communication, and that's something that I agree with. I think if you can show somebody a video of, how to run through a CRM, how to place an order for your business, or how to do some kind of transaction, whatever, it's much easier to actually see and walk through it than it is to give somebody a list of instructions and say, kind of go figure it out. Now, that's just one of the many services that Vimeo provides, but it is the core of their business, is helping other businesses be able to produce content for their business through video. But let's take a look over to their website and see exactly how do they make money. Now, as I just mentioned, Vimeo is a subscription service, and this is something I actually remember from when I was making skateboarding videos and uploading them to Vimeo, because there was always a gigabyte limit to how long of a video I can upload. Back then, I think it was like 2-3 gigs a week or something. It was a very small amount, but nonetheless, it was a great platform for me to upload to. And it is a freemium service, so they do have an amount that you're able to upload a week without paying, but as we could see here through their different structures, they do have monthly or annually subscriptions, which as an investor is something I like to see. Now, often with Vimeo, what you'll notice is that they are not an ad-based platform like what YouTube is. YouTube makes a lot of their money through running ads on videos, where Vimeo makes more of their money through this subscription service. The reason being is because when businesses are trying to send out proposals, videos, instructions, what have you through their service, they don't want the user to be distracted by an ad. They want you to be able to get straight to the content and get the information that you need. So they did need to establish this subscription service in order for them to make money without needing to run ads. Think of like Netflix. It's why you pay a monthly subscription for Netflix, and Netflix is a little bit more expensive than some other streaming services. It's because Netflix has, and as they say, will never have ads. And that's what we're seeing here with Vimeo. And just taking a quick scroll here through some of the features that they have through these plans, you can see that one of the very first things that they emphasize on here, where did it go, is no ads before, after, or on your video. So they are very firm on not having ads on your video, again, which is something that a lot of businesses or maybe other content creators would enjoy when they're trying to provide a message rather than just making money through their content. And as we could see, some of these video players or some of these features that they offer is for a customizable template for you to use, really allowing for you to hone in on your brand and build out something that fits in line with the brand you're trying to portray. It'll match your colors, you can have your logos involved, all of that fun stuff. So really keeping consistent with your business. One thing I'm seeing here that seems interesting to me is this TV apps with Roku and Amazon Fire. I wonder if that actually gives you the ability to create an app that people can use. So again, example using my real estate business. If we were to make videos going through like the flips that my partner Will is going through some of his houses, would we be able to have a TV app on Roku or Amazon where somebody can go and actually just watch those videos directly. I think that would actually be a really cool feature. Probably not something at this point in our business would be worth implementing, but if I were to be like a travel agency, maybe even a bigger real estate agent than what I have now, that would absolutely be something that I would explore because, again, I'm a big believer in being able to establish your brand, and I think that's just a great way to be able to do so. I don't know, kind of a small feature, but something that I would really like if that's the ability. This could also just simply be the Vimeo TV app, which I have seen on devices before. And lastly, some of these plans do allow for you to also make money through your content. So if you're somebody, let's say you wanted to create like your own masterclass, but didn't go through like Skillshare or Masterclass, you can actually sell those videos through Vimeo. So, I like doing barbecue. If I were to make a series on barbecue, but didn't want to give it out for free, again, didn't really want ads on it though, but wanted to be able to make money, this would be something I would probably consider saying, for $15, here's my class on how I, make a pork butt, pork ribs, and a brisket. I don't know, just an example there, but it's something I like because a lot of businesses do want to be able to monetize, but again, ads can be distracting and can take away from your brand, so that's a feature I really like. The thing I forgot to talk about was this whole spin-off and their parent company, IAC. So real quickly here, they did go public through a spin-off. I wasn't able to find the direct reason why they went public through a spin-off, so if any of you do know the exact reason why they decided to do this, please leave that in the comment section down below. Commonly though, the reason why some companies might decide to do a spin-off is because maybe either the parent company or the company they're spinning off have different growth targets and different objectives, so they might spin it off just to help keep like metrics and measurements all in line together. Also, sometimes when you're a parent company, you might just have a lot of brands underneath you that either it's better just to maybe get rid of some, spin some of them off so that way you can focus on some of the core brands you already have, or just be able to take on some new targets. Some companies that you might have heard of in the past, though, that IAC is either a parent company for or previously owned, could be companies like Care.com, Investopedia, Match.com, and even, if you remember this one, Ask Jeeves, Ask.com, Ask Media Group. Those all either currently or have previously fell underneath the roof of IAC. So IAC has done a really good job of growing some of these brands. I'm curious to know what they're doing with Ask, but I don't really care too much about that one. But they've done a great job of acquiring some pretty well-known brands and then either have helped grow them or have spun them off. It's worth noting as well that when a company does a spin-off, their objective usually is not to raise money. Most times you don't actually receive direct profits through a spin-off. You might be able to gain some profits through the shares that you'll receive from the spinoff, but it's not like an IPO that companies would utilize to actually raise money for the business. So just one other thing I wanted to point out to all of you. All right, so back to Vimeo. What I wanted to do next here is just take a look at some of the numbers that they've reported. Now, again, this is a very recent spinoff. I think it completed within the past few weeks or so. So we don't have too much information. If you go to websites like Seeking Alpha, you're not really going to find anything. Even Simply Wall Street's not going to have the best data out there. So really the best way to get this information is directly from the source itself. Remember, I've showed you this before, but one of the easiest ways to get this info directly from them is just go to the company's website. At the bottom, you'll usually be able to see the investor relations. And then that should bring us to here where it'll have all your financial data, like your numbers, SEC reportings, filings, all that fun stuff. And I do like to take a quick look through some of these numbers here because we can actually find some pretty interesting information here. As we see in the website, they have over 200 million users. Of that, 1.6 million are paid subscribers. They have over 100 billion views. They have over 350,000 videos being added every single day, and they're available in 190 countries. So that's already some pretty interesting numbers to me. Now, I do think it's a little interesting to see that 1.6 million in paid subscribers compared to the 200 million users. That's obviously something I'd like to see that difference maybe decrease a little bit. But I would like to know where they get that 200 million users from. Is this from somebody that watches a video because corporate sent it out and saying, here's your training you need to watch? Or are these people who actively search on Vimeo to get that 200 million number? And again, sorry too if this video is a little all over the place. I genuinely do not have a script here today. So it's just kind of how I start my research, and I hope you're able to follow along with all of this. So if we go to their financials here, let's take a look at their earnings. As we can see, not really much to work with so far. That's okay. Let's take a look at the press release. Perfect. All right, so right off the bat here, we already have some numbers to look at. Revenue has grown, this is over a 1 year time frame, 57%, and their gross profit has grown 67% over that 1 year. So that is good to see as well. Their losses have actually, I guess, decreased. The losses have grown 67%, but for the better. So as we can see, it was at the 17.2, and then it just went down to 5.6. So that's something good to see, and that's actually a pretty dramatic decrease in the amount of losses that they had, which is encouraging for me to see. I like seeing these numbers as well. So the revenue increased 57%, and that was driven by the 25% subscriber growth to nearly 1.6 million, as well as the 27% average revenue per user, also known as ARPU, growth to a record high of $233. So that is really good to see. $233 per user is good, I guess. And then just again, something else that's interesting to see. So who uses this at the corporate level? Well, these are probably some companies that you've heard of before. We have Intuit. I believe that's the owner of TurboTax. They have Spotify. We all know Spotify, Amazon, SAP, Comcast, the San Antonio Spurs, and University of Florida, as well as the New York Times. So you've probably heard of at least some of those names before, and these are obviously going to be very big players that I'm sure are helping Vimeo make a lot of money. And again, here we can't see that revenue growth because, as we can tell, or as we saw earlier, that they have had the revenue growth, which was driven by an increase in average revenue per user, as well as, what was the other one? The amount of subscribers? Yeah, and as well as in subscriber growth. So that makes sense, and it's in line with what they reported earlier, so I am comfortable taking a look at that. We can see the difference there. We could see their gross profit. We could see their gross profit has also increased, so that's something great to see. As we can see, the total operating expenses has increased as well. That's actually something I'm not really too concerned about right now, because as we saw, they are growing the amount of paid subscribers that they have to their platform. With that is going to come some more costs. Now, also, as we could see, some of that expenses, one of the biggest increases here had to do with sales and marketing, up by about $8 million, give or take. What would that be? Up by about $7 million, give or take. So that is something we should expect because, again, as they try to reach other maybe colleges, universities, or business, we should see those expenses increase. Also, as they gain more subscribers, they're obviously going to need to hire more employees. They're going to have to take on more staff, build better infrastructure, all of that fun stuff. So again, with this being a company that I feel is still very much in a growth stage, we should see those expenses increasing. But as long as they're still able to increase their earnings, then I'm comfortable with the increase in expenses. And that's actually what we see right here in the net earnings. We had negative 20 million, and now it's at around 3 million. So that's something that I am okay with. So now taking a look at the balance sheet, we obviously do want to take a look at how healthy this company is financially. One of the things I'm going to do, just kind of quickly taking a look here, is see what the current ratio for this company is. So let me pull up my calculator so you can see me do this. All right, so total current assets is 341,761. So 341,761 divided by total current liabilities, which is 190,665. So 190,665. Gives us a current ratio of 1.79. Now, again, these are kind of loose numbers here. I would obviously triple check that if this was a company I was considering actually buying. But these are things I like to quickly look at. Now, as we could tell, that is a quick ratio that absolutely makes me feel comfortable with this company. Taking a look at some of the other liabilities, so they don't really have much debt that they have to pay back. They have deferred revenue costs, but they also have promissory notes. No, they don't. They don't have any notes that they need to pay back, which is really good to see. Again, with this being a company I would still consider very much in the growth stage. I like when companies are growing but don't have the need to take on a lot of debt, because obviously with growth we should expect some risk being tied to that, and we can really help mitigate the amount of risk we're taking on as the investor if this company doesn't have a lot of debt that they need to take back, especially in an environment where interest rates might be changing. All right, so now I'm on this page that they call grids and metrics, and I actually came across some statistics that I really was looking out for, and that is where you could see the revenue growth as well as subscriber growth. Starting off though with the revenue growth, obviously as we could see platform, that mostly has to do with the revenue they receive through subscribers on their platform. I'm sure there's a few other things tied into it, but as we could see from this note, it does say basically primarily subscription revenue. So, and as all of you know, I love subscription revenue, so that's great to see that this is a subscription-based platform for their revenue making, money making, whatever you want to call it. So the platform, we could see 193.7 for the fiscal year end of 2019 compared to the fiscal year end of 2020 at 283.2. So that's some pretty significant growth over a 1 year's time frame. Also taking a look at how we've been doing so far in 2021, we can see at 89.4 compared to 2020's 57. That is great growth to see. Now, with us only having 1 quarter though, we can't bank on this. And that's one of the reasons why I like to hold off on companies that might be relatively new to the public markets, because I really want to make sure that this growth is consistent. Only having 1 full year's data set to work with is not really enough for me to make an informed decision. And while this 89.4 relative to the 57 is a great growth and it's obviously headed in the right direction, I want to make sure that's something that's consistent and sustainable over a few more quarters at least, if not maybe a few more years, just to make sure that this company is able to maintain the growth that it has. But what's really exciting about this is, as we could see for the fiscal year end of 2019, the subscribers was 1,232. Obviously, I'm not adding the other zeros to this. You could feel free to do that on your own time. But the amount that they had here for the entire year of 2019 is less than what they've done in 1 quarter of 2021. And that so far at least does seem to be consistent, because if we look at 2020, there is not a single quarter where that number is below what we have for the whole year of 2019. So that is something that I absolutely love to see, and I'm excited to see, because the more and more subscribers they have, obviously is going to be the more money coming into this platform. And with people generally going to an annual plan, or at least that's what they make it sound like, then that is going to be guaranteed money that they'll receive over a course of a year, which I enjoy. And as we can see here as well, the average revenue per user has also increased. So that's something, again, just exciting to see, but it's obviously something that we are going to want to keep an eye on as we move forward and as this company has a few more earnings reports. So now I did want to take you over to Yahoo Finance. No, I don't generally look at charts, and with this being out for not that long as their own company, it's not like we're going to get that much information, but I wanted to show you something. Obviously, Google's algorithm is doing its thing because we now have ads for Vimeo. All right, so they went public officially on their own on May 21st, 2021. They had a price of $57 a share and are currently trading about $13 below that at $44.03. Now, with this being a spinoff, that's something we should expect, because a lot of the shareholders that had this stock to begin with when it hit the public markets were probably people inside of the IAC organization or current employees for Vimeo. And with them now being underneath their own ticker symbol, there's probably been a good amount of shareholders that have sold out of this position. It looks like only 20 million, these are just numbers off the top of my head, so I apologize. Looks like about 20 million shares of Vimeo were available to the public, and about 130 million were retained within IAC or Vimeo. So not as many shares went to the public, so when you look this up, you'll probably see notes saying that it's an illiquid company, things like that. That's not really something I'm concerned with right now because it's so new to the public market. Some people that work there are either going to hold on to their shares, obviously, or some of these people might look at this as an opportunity to take their money and run, depending on their outlook of how this company should perform in the future. As you can see here too, though, there's not much information to really work with. Even Yahoo Finance doesn't have almost any of that information. All right, sorry about that. I got a phone call as I was in the middle of the recording here and totally lost my train of thought. But as we take a look here at this chart, again, I just want to point that out. So we could see, yes, it is trading down from when it actually hit the markets, and by a fairly large margin, by about $13 a share, which, you know, if you bought a significant portion the day it hit the markets, then you probably are out a few bucks. But as we could see, again, there's just not a lot of information out there right now. As we see from TipRank 17 days ago, Vimeo is poised for sustainable long-term growth, says analysts. So that would be maybe an article that I would consider reading. Another company I forgot to mention IAC previously owned was Expedia. So, you know, IAC has done a great job with raising these companies that have a lot of brand recognition and a lot of power in today's market. Now, if you're curious, it does look like some analysts have some pretty optimistic outlooks for this company. As I've said before, I do not care about what analysts have to give a rating for with this company because they don't know my investment objective. So some companies that they say are a buy might be a hold for me, things like that. But, you know, obviously we have overweight, outperformed by a buy. Those are encouraging numbers to see, or encouraging outlooks to see, if that's something that you tend to put some emphasis on. Just personally, I typically don't. So that's just really a quick overview on how I again start this research to add something to a buy list. I know this has not been sufficient research to go ahead and buy this stock, but this is at least enough for me to get a foundation of my understanding for this company. And I did see some things that I was really impressed with. I liked that they had more than one recognizable name for their subscribers. Again, New York Times, University of Florida, Amazon, other companies that I forgot. So they obviously are being utilized by some really big names out there. We have seen that they've had some pretty successful growth both in their revenue as well as in their subscribers, which is something I always enjoy seeing. They do have a subscription-based platform, which is something I love because it helps have a more consistent amount of revenue and makes it easier to do projections. I think they're hitting what some might consider to be a niche market, but one that actually needs to be hit pretty hard, and I think they're doing a great job of tackling that task. Some things, though, that I am going to watch out for this company is there another provider out there right now doing something similar to what Vimeo is? Another platform I used to upload skate videos to is Blip.tv. I don't know what they're doing these days, but maybe they're kind of following in the same trail as Vimeo. Maybe there's some other players out there that I have not heard of that are doing the same thing. And I want to see, what is Vimeo's competitive advantage going to be? We can always make the comparison to YouTube with Vimeo, but I really don't think these hit the same markets because YouTube is more of like an enjoyable content, go ahead and share stuff, and they run ads to it. Vimeo really is focused on that business created content, whether that be things like a masterclass or training videos, anything like that where ads just are not needed is where Vimeo really comes in, and that's something I think is going to be very beneficial, as well as the customizable features. And with this company only having about a $7.2 billion market cap right now, I think this company has the ability to grow exponentially. Now, despite this company being one that I'm very familiar with, I've used for years, I think they hit a really good market. I just can't walk away from this being comfortable enough to put my own money into this as an investment. So it's absolutely going to be something that I'm going to add to a watch list, but it will stay on a watch list at least for the next few quarters so that I can measure the performance myself and look at some of those other key statistics that I like to see when I'm investing in a company. But as always, I hope that you were able to learn something from this. I hope that you got some value out of this. Leave some comments below if you have any questions for me. If there's anything I missed or anything you want me to go over about Vimeo, I'll gladly do that. If you like this video, just remember 5-cent donation for charity. And if you haven't subscribed already, that is a 10-cent donation for charity. But I'm going to wrap up here. So thank you so much for taking the time out of your day to watch this. You could be anywhere in the world, but you're right here with me. And I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I will see you next time.